What's up, guys? Welcome back to Crypto Weekly Review, home of the Wolf Pack. In this video, I'm going to tell you why I bought Ethereum and why I bought ETH today, even though Bitcoin is printing its very first weekly death cross, and apparently we're having some sort of alien invasion. I'm not too concerned about the very first weekly chart death cross because this is a lagging indicator, and we are talking about the weekly chart. We are going into the halving. We are about 450 days away. We are in the historical accumulation zone, and I am accumulating. Like I said, to me, this tells me how oversold this market really is. I don't think we're going to go into a long-term bear market. That's what the death cross suggests. Now, taking a look at the daily chart, we finally have a little bit of a correction, but we are above the bear abla. We are above the bear market trend line for the first time and consolidating, riding it down. Do I think it's time to start cozying up to the bears? No, I don't. In fact, I bought today, and I bought because of macro signals. We have a CPI print on Valentine's Day, and I believe we are going to beat expectations. It's expected to be 6.2% year over year for the month of January. I think the numbers are going to come back better than expected and cause the market to go into a frenzy. I'm not saying that you should quit your job at McDonald's and dump your bear market girlfriend, but I do think we are bottoming. We are finding EMA support at the 200 exponential moving average. We have a little baby golden cross here. We are finding support on the previous high before the big juicy FTX bottom. Look at those cheeks right there. Now look, this is a bold prediction. Probably the most bold prediction I've had since I sold the 65K top and Hex 45 cents. But I'm a macro trader. I trade the trends, and I see that the sentiment is shifting. And a good example of that is the Super Bowl. The Super Bowl in the United States is basically a holiday. It's also one of the biggest advertising events of the year. There was projected to be 115 million people tuning into the game. Now, that is up from last year. That is actually a new record. When you consider there's 319 million people in the United States, that is almost 1/3 of the country watching the game. Now, if you remember last year, crypto companies spent over $54 million on Super Bowl ads, and everybody was calling it a top signal. Since then, Bitcoin is down 49%. During last Super Bowl, Bitcoin was $42,000. Now it is just 21. Yes, you would lose 49% if you had bought during the Super Bowl. Well, in this one, the ads from cryptocurrency companies have been banned and blocked because of all of the fiascos and the collapse in the overall crypto space. Now, everybody knows that when celebrities tell you to buy a cryptocurrency, that is the classic crypto top signal. In fact, if you listen to Matt Damon, you would be down 80% off the lows. You'd be down 65% at current levels. If you listen to Steph Curry, you'd be down 50%. LeBron James, you'd be down 48%. And Tom Brady, you would be down 35%. Now, if you listen to Logan Paul, you would be down 100%. Everybody knows when celebrities are shilling, the top is near. If grandma is asking you about Dogecoin, sell everything, exit all markets. My question is, can there be an inverse of that? I mean, cryptocurrency is about as popular as a turd in a punch bowl right now. It's embarrassing to tell your friends that you're on cryptocurrency. No celebrities are shilling. In fact, cryptocurrency ads are banned in the largest sporting event in America, actually the largest ad revenue event in America. I think that is a bottom signal that no one is talking about. It might be time to onboard grandma into Hex. Of course, I have to say, not financial advice, just in case it ruins your life. Now, we have had Kraken, one of the biggest US exchanges, shut down their ETH staking program and pay a $30 million fee to the SEC. Now, this is bullish because they are not actually saying staking is a security. It seems like Gary Gensler is fine with it for now. They have a problem with staking as a service from centralized exchanges, taking your Ethereum, staking it for you, then taking 35% of your yield. I happen to agree that staking as a service passes the Howey test and is a security. What the SEC wants is decentralized exchanges to provide disclosures to the customers so a FTX doesn't happen. Disclosures just tell the customers where the money is going and how the yield is created. Remember, in crypto, if you don't know where the yield comes from, you are the yield.
what do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share?
That sounds great because it's going to keep the Caroline Ellisons and the Sam Bankman-Frieds out of the space, but it does come with a catch because with securities laws and disclosures, you may have to be an accredited investor, which means you have to make over 200K for multiple years, sometimes a portfolio over $1 million. So it is going to flush the small fish out of the ETH staking pool. They might have to move over to Pulsechain with their tiny itty bitty little stakes. Also, the ETH validators are very, very hard to figure out for normal plebes, and you have to have 32 ETH. It's very, very brutal. It's a little bit bearish for ETH. If you are a small fish, you may have to move and stake on some other chain. Maybe a pulse chain, maybe something that is completely decentralized and doesn't require a middleman or counterparty risk or $50,000. That's how much it costs to run an Ethereum node right now. Take your tiny itty bitty little stakes, move it to some other chain. That's not the most interesting part of this story. Coinbase, unlike Kraken, is going to take the SEC to trial over this thing. It's going to be a long, bitter battle for years, kind of like the XRP case. They are claiming that their staking program, Earn, is not a security because there's no expectation of profits from the work of others. They take your money, they stake it in ETH for you, then they take 35% of your yield and give it back to you. I mean, it's an open and shut case, but so is XRP, and they've been in court for years. Yes, Brian Armstrong, take them to court and have the SEC tied up in this giant legal battle so it takes the heat off the rest of my shitcoins. Thank you, sir. That is the most bullish part of this whole thing. I'm not trying to shill anything, but it seems like the SEC does not mind true DeFi.
Idea behind many of these innovations in crypto is really to move away from centralized entities or particular people and to look at on-chain development of innovation, on-chain activity, which is transparent, which anyone can audit. You have to have the technical expertise to do it, but it's out there for everyone to see, can be audited, and everyone interacts with it on the same terms. That transparency and that decentralized nature is what a lot of people in the industry are striving for. And so
that is SEC Commissioner Hester Pierce speaking my language. So no, I'm not really bearish on regulations on DeFi just yet. Not yet. You can't trust these guys. They're a pet snake. If they bite you, it's in their nature. And also, Gary Gensler had some weird fishy ties to FTX and Sam Bankman-Fried. So much so that Congress Republicans are launching an investigation into the SEC, which to me is also bullish. It goes to show you that there is a political shift going on in the United States. Now, remember, I'm not political. I'm not on any party. I am the leader of the Wolfpack Liberation Party, okay? I'm on my own side. I'm on Team Gaines, all right? But seems like the conservatives in the United States are taking over, and they're going to probably take over in 2024, and they are very pro crypto too. Now that is going into the election, which I believe crypto is going to be one of the leading issues in that election going into the halving. So I'm very, very bullish on 2024. I'm also bullish on my rare dump trading cards, which I'm already 3x just in floor price. Speaking of NFTs, in the last stream, we were talking about how Bitcoiners are losing their mind because ordinals now allow JPEGs, NFTs on the layer 1 of Bitcoin. People are spending an entire Bitcoin just to buy one Satoshi, meaning one Bitcoin no longer equals one Bitcoin. That trope is definitely dead. Well, as of February 11th, ordinal inscriptions have jumped to 59% of the block space. Now that is for February 11th. What is going to happen here? Can this stupid, silly JPEG bring down the whole proof of concept of Bitcoin? Hex on the daily chart is one of the top 5 performing coins in 2023. It is finally cooling down and seeing a correction. The correction is not as low as I would like it to be, but I have already bought, and I bought as a speculative play. Remember, this isn't financial advice. This could ruin your life. but I did buy. Now, I would prefer to buy at least like the low 4-cent mark, like 4.2 cents, or even the 21 exponential moving average at about 3.8 cents, or the R1 pivot at about 3.5 cents. Those were my targets, but I did not reach those targets. It's just not cooling down fast enough for the macro news event tomorrow. I believe the CPI numbers are going to come back cool, and it's going to pump the whole market, including HEX, including everything. So I just went ahead and picked some up. This is a speculative macro play. If it goes against me, if we dump tomorrow, if the numbers come back hotter than expected, then I'm just going to hodl this stuff until the next cycle. You know what I mean? My mindset going into this is I'm buying for the bull market, but I do want to get in before what I believe is going to be a soft CPI. HEX has proven that it's going to be one of the top movers in the upcoming bull market with 139 million social media engagements in the last month. It's definitely the strongest cryptocurrency community on Twitter, and it's going to have some of the biggest shills. When Pulsechain version 3 comes out, it's going to have Ivan on Tech and BitBoy shilling this thing. And what is going to be the best on-ramp into Pulsechain? What's going to be the most liquid pair on Pulsechain when it comes out? Well, that is going to be HEX. So the people that have missed the sacrifice will be able to buy HEX. It's the most liquid pair of everything in the Pulsechain community that's going to be forked over. That is the best way to get in. The hype cycle is going to be absolutely nuts. Okay. So anyways, guys, that's all I got for today. Stay cool, stay strong out there, like and subscribe, join the Wolf Pack, and I'll see you on the next one. Peace.